Good morning, folks. Friday morning, an hour before the European opening. Just a quick Forex preview, quick sound check. Coming through okay? 1, 2, 3. Here we go. What a morning, morning Orphan, morning Stokes. Well, what a crazy market we're in. Just spanning across the Forex markets. US dollar under big pressure, as we've seen, back down now at this all-important support from the Trump candle. This is back now to the election levels. This is basically where we were the day after the election results, before we had the move up to the upside. We're back down here now. We've been here for 1, 2, 3, 4 tests, the last 5 tests in the last month. And then back, obviously, in March, we tested it once again at this key level. But we're also seeing the unique situation. Let's have a look. I haven't checked this morning, but look at bond yields as well. Bond markets are low, which means yields are high. So yields are pushing higher. Gold's pushing lower. Dollar's pushing lower. It all seems a bit chaotic in the markets at the moment. This, of course, is all on the backdrop of what's going out in Asia as well, and commodity prices. Let's just have a quick look actually at the bond yields this morning. But yeah, I mean, dollar at the moment is in its doldrums. Dollar yen hit off the 113 level and soon bounced off that yesterday, and now we're sort of like 70 pips lower down. 10-year yield at 235 still. Yeah, I mean, so that's sort of up from 227 from the lows, and dollar is on its low. So it really is in a bit of a bizarre old market to trade at the moment. Of course, we've got non-farm payroll out today just to put the spanner in the works. Here's dollar yen. So dollar yen, I know Jason was a seller of dollar yen yesterday, which worked out quite nicely at the 113 handle at the moment. Not inclined to get long dollar yen at this moment, and of course at this level, this is a big move again we've had in the last 4 hours or so, as yen's put on some strength, coming back into a buy zone, which won't be down until the 1180 for me in the dollar yen. But it's not the preferred. Morning Victoria, I don't think we spoke before. Oh, admin. Morning Victoria. So we're looking back down at the 1180, 75, 80 area for me to consider getting back along here at the moment. I still think the trend is penciled out to the upside, but getting in at these levels with the nervousness of the dollar ahead of non-farm payroll, not for me at the moment. It's a really important number this week, I think. We've had a whole series of weak data in the last month since the last non-farm payroll, which came in at a shocking misjudgment of underestimate of 98,000. This time we're going for, I think it was 180,000, something like that. ADP numbers this week are pointing for higher numbers. We had some PMI numbers out this week as well, which were reasonably good. So this is a really important number. It looks as though the Trump administration is getting things moving in terms of health, healthcare, rolling back the Dodd-Frank. That's all going up for vote. So things are possibly moving in that direction. But this number is important. Now, the market's pretty much as we did in February. If you remember, in February, the market was penciling in a 30% potential for a hike in March. By the end of February, the market had pretty much priced in a 95% hike in March, and of course we had the hike. Now, if you looked at this week, we started off at around 60%. Now the dot charts are pointing in a 95% chance of a hike in June. So any bad number in here will basically be bad for the dollar. And a bad number for non-farm payroll, I'm talking about anything anything down to the 120 level when the markets are going for 170 and expecting a rebound and expecting a possible revision from last month's numbers. Any bad number could be really negative. Any good number, well, it's pretty much priced in. The bond market's pricing it in. The 30-year bonds also, pricing it in. So we're not expecting, huge. We're not expecting huge moves to the upside if we have a really strong number, because I think the hikes in June are penciled in. Remember, we've only got 2 hikes penciled in for the rest of the year, one in June possibly, one in September. So at the moment we're on schedule, and that's what's in the market. Any shocks away from that is going to be more negative than any confirmation of the of that. So let's have a look. What are we looking for in non-farm? We're looking for 195. Yeah, 195, and of course unemployment rate at, edging higher at 4.6. Okay, so that's the dollar yen. But of course we've had the yen strength. If you look at strength on the 1 hour chart, the yen is the strongest. But of course you have to scan out to the high time frame to see what the general picture is. And yen on the 1 hour, on the 1 daily, is still the second weakest currency, dragged down by the Canadian and of course the Aussie. So when I started off by saying what a bizarre market we had, I mean, look at what's happened in the commodity prices over the last month, but certainly yesterday, Thursday, they absolutely collapsed. Iron ore was significantly lower on the back of weaker Chinese numbers and possible slowdown in China demand. Copper prices again, Aussie, Australia, the biggest export. It's their biggest export. LME numbers showing a glut of supply in copper. Copper has knocked off its perch, had a bit of a rally over the last week or so, which has been pulled back down again. RBA statement last night was not particularly hawkish. Everything seems to work. The words they used were sort of gradual in many. Gradual creep up in inflation, the gradual fall in unemployment. Everything seems to be very gradual. The market's certainly not pricing any rate moves in Aussie this year, and I think that was reiterated in the statement last night. Also, they cited their global concerns for the commodity prices as well. And when the RBA start talking about that, then of course it is cause for concern. And of course the Aussie came off on the back of it last night. So that is a currency under pressure, as is the loonie, which is the CAD, of course, which is which has been pulled back down by oil prices. If you look at oil prices, we've got supply glut potentially in oil prices. Oil has had a fall, a huge fall. This is look at this here. This is in the last overnight. So this is at 4. It's about 3 hours ago. We had this, big drop in WTI, back down to 43.71. Okay, it's recovering somewhat at the moment. OPEC and non-OPEC ministers are sort of citing that they'll extend the production cuts, but increasing them unlikely. So this is weighing heavily on the oil prices, which is weighing heavily on the Canadian dollar. Okay, so that's basically what we're seeing at the moment. We're seeing these commodity prices, oil prices, commodity in general, really weighing on these currencies. So let's have a look at how we're playing that. Now, I am still looking at the stronger currencies, the euro and the British pound. The Swiss franc is hugging the euro at the moment. And you can see here the dollar's being knocked off its perch. The Japanese yen is just basically the reflection, I think, of the pullback you've seen in the US dollar down to the Trump support candle. So, so these are the currencies you should be playing, I think, still here with the these ones on the other side of it. We like to buy strength over weakness. I know I'm repeating myself to the old timers in the room, but we like to buy strength and sell weakness. The yen is still a weak currency. Let's have a look at euro yen, because it has been the flavour of been my favourite pair for the last couple of weeks. I'm now out of this. I took profits earlier, and looking for a possible re-entry. Now my re-entry level is, we're having a pullback at the moment. I want to see, this is a massive move we've had over the last few days, since basically the end of April. We've had like a 300 pip move So I'm looking for, when I want to get into this on a 1 hour, I want to see a sort of a decent pullback, 30% pullback, which is like a 75 pip pullback into this area here, 129, 123 basically. So this is an area, it's not far off it now. So if we get back into here, I'm going to get along again euro yen. With the stops below here, which is more of a conservative entry. So if you are more conservative, you might want to pull back down to the 122.60 level, but a more aggressive entry, which I think I'll take if we do pull back into here, would be the 123.10 area, 123.05 to 123.10 area. So that's the first entry with stops below here. So you can have a 50-60 pip stop. Okay, for continuation to the upside into the weekend. Now, Macron Le Pen face off on Sunday. That's the election. Results out Sunday night, GMT, which is around about 3 in the afternoon, Eastern Standard Time, Asian morning, early morning Asia. It could be a case of buying rumour, selling the fact. You could see an initial blip up in the euro but it's pretty much in the market, and people that believe the Forex market is easy, it will be deluded when they see the snapback you see once the results are out. But it's unlikely that I'll hold this into the weekend if I get long here. But in the run up to the close, not such a bad entry in euro yen at those levels. So we'll see how that pans out. The other trade, of course, is the euro against the weaker currency. So if you look at euro Oz, which happens to be, he's going to be asleep now, of course, but happens to be one of Jason's favourite pairs. So euro Oz looking at a pullback into 148.40 area. Okay, it's basically the highs of yesterday's session. Okay, so this is I would say what I would consider a conservative entry. And if you want to take a 50% pullback of the move today, then of course it brings you in at around 148.60 on the 1 hour chart. ATR is running around 20 pips on the 1 hour chart. So that's about a 2 ATR pullback from the highs. Pretty much half of this Mizubu candle and this small, it's not doji, but 0.5% pullback. So 148.60 possible entry in Euro Oz. Euro Oz, of course, the Oz is being the weakest. So this is most probably the best pair to trade, I think, at the moment, in terms of strength over weakness. Yeah, we'll see how commodity prices fare out today, but picking bottoms in Aussie, having had what I would consider dovish to flat RBA, the excitement in the euro, standing in front of this train, difficult one. It's just been a great trendy market. It's just been relentless in terms of what we've seen. Look at this, the 4 hour chart from middle of April. I mean, it's just perfectly trending. Perfect cycles of a healthy trendy market. Could go, wheels all could come off, of course, next week. That's why I say it's a very interesting market at the moment. I haven't seen markets like this. There's so many things going on in so many different levels, from the geopolitical concerns to Trump, to Europe, to commodity prices, to China. I mean, there's so much going on in the commodities. We spoke about this. Morning, Ollie boy. Spoke about this at the beginning of the year. It's going to be a great year, and it's just shaping up to be that way at the moment. Anyway, so Euro Oz is possible trade of the day. Continuation on that Euro CAD. another one. Oil prices, another great trendy market. This is the 15-minute chart. Okay, so let's see a pullback from here. Pull back into the yesterday's high again. Same theory. Just looking for some structure to the left. That is going to be the naked eye. It's about a 50% retracement as well. Yeah, 50% bang on from the low to the high. So getting in Euro CAD is also at 151.30. Beg your pardon, that's where we are now at 151.20. So this is the hourly chart. If this pings in the next half an hour or so, I'll be getting myself long in the Euro CAD. Prepare for the UJ and pound yen splashdown as the markets move back into the yen. Euro Oz is rising for 52 hours straight. Well, there you go. Haven't got that number to my head, but yeah. I'm not quite sure you mean, is that the real Andrew? Not quite sure you mean by that. Hunt Greek, the real Andrew. I thought it started in 45 minutes. Oh, I beg your pardon, sorry. No, I come in on... this is the real Andrew. This is live in London, yeah, at 7:20 in the morning. This week and next week I will be streaming pre-London opening, which is at 7 AM GMT, or BST I should say now. And as of the week after that, I'll be coming on at the opening. Yes, is that the real Andrew? Yeah, I wish I was still lying in bed, but there you go. Right, so pound yen. Pound yen is the other trade. Now I'm not, I haven't moved to break even. This is, I'm still in the pound yen. And if I wasn't in, I would continue to get in at my entry level, which is at 144.60. We've this is another entry that we've just pulled through in the last 3 hours or so, which was a conservative entry. So you'd have been long here on my aggressive entry, I should have said. So you should be you could be long here, getting long here as well. Pound yen. I mean, I know you're talking about a splashdown, but for me, I don't stand in front of freight trains. That's just the way I trade. And of course, the trend change at some point, and then I normally would give something back at the end. But once we're still trending, and I don't generally pick swing trades to the downside. Now that doesn't mean I won't pick levels and take 20-30 pips from a key support or resistance level. But taking longer term trades, I don't, I'm not good enough in terms of accuracy picking trend reversals for longer term trend reversals. I just haven't been very good at it over the last 10 years or so. So I just tend to go with the trend, appreciating that I give something back at the end when it does. What do they say? The trend is your friend to the bend at the end. So the bend at the end costs me normally, but at the moment I'm still playing it to the upside. So getting long pound yen, still not disillusioned by this trade. Still happy to be in here. I've got quite a wide stop on here, 70 pip stop. And playing this one to the upside. I mean, the euro's just had a massive move. It's on yearly highs in the euro. Let's have a quick look at the majors. I'll tell you what, I'll look at the Aussie New Zealand. This is my trade idea from yesterday. If you recall, some of you I know have taken it. My pound CAD trade yesterday was Let's have a look at Aussie New Zealand current trade idea. So this is the trade idea from yesterday. I'm still in it. Okay, we haven't got I haven't pushed up to halfway to my stop at the moment, but I've got a wide stop and wide take profit level, and I'm still running this little puppy. The RBA helped me. I've been 60 pips on side. My target is basically 96 pips. Target's down here at 106.80. Okay, about 60 pips away from where we are at the moment, and it's currently about 30 pips on side. My stop's 50 pips away. So still short Aussie New Zealand. Of course, New Zealand is going to get dragged down to a certain extent with the Aussie, but I think Aussie is certainly the weaker of the two, and New Zealand has had some buoyant numbers out over the last a couple of weeks or so. So New Zealand is faring better than the Aussie in terms of economic data, depending where you are in the world. So that's my trade idea from yesterday. Still in that trade. Don't come crying to me if the pound yen falls 800 pips. Well, that would be that's a bold call. 800 pips in pound yen. Pound CAD. I mean, pound CAD falling 800 pips. I think let's have a look at pound CAD. Well, this move, from the last. Look where we've gone from pound CAD since the beginning of the year. From 57 to 78, it's almost 2,000 pips in the pound CAD, so that can fall 800 pips, no problem. Not sure about the yen. Pound CAD was my trade idea yesterday. We took 50 pips out of it over a couple of hour period yesterday. Not in pound CAD at the moment, but liking it. Pound CAD for re-entry. This is where we took profits yesterday. Let me just increase the size here a little bit. So yesterday's trade, we were long here, took profits here after a couple of tests and a bit of nervousness. This doji, and then closed higher, broke the two previous highs, and then sauntered on up. Came back to retest my profit target, and motored back on and put on another 50 pips or so. So pound yen continuing to the upside. $170.78, 177.90 is the target here, but call it 178 for the sake of it. So we are keeping an eye on this one again for trend continuation. That's an aggressive entry, more conservative entry. Looking back down at where I exited yesterday again. I mean, we've tested it here and pulled back up. I mean, this is another bullish candle here. This hammer candle, tested through, broke through the moving average. It's not a significant moving average. It's only a 10 for visual, but broke through or pierced the structure support to the left, and then traded higher. Broke this candle, created new highs, and of course we're taking off. So this is a bullish formation in terms of candle patterns. I'd like to see us come back down into this level before I consider getting long again, or potentially more aggressive at this level, which is just as I say, 77.90. If you're getting long here, you've got a 50 pip stop, which is it's the 1 hour ATR, 20 pips. So you can have a maximum 3 ATR stop, takes you 60 pips out. If you're getting, obviously you can position size and have have your stops much lower down. But I'd never like to really have stops much more than a 380R if I'm taking a signal off a particular entry chart. Then a 380Rs is really the time to call it a day, as far as I'm concerned. The way I trade anyway. If you enter in here at 77.60, again, you've got a 60 pip stop to below this structure level here. Pound CAD. So that's the way I'm looking at it today. That's the way I'm looking at the markets today. Looking at continuation of strength, euro, pound. I mean, yen's caught a bid, but I mean, yen's just coming out in sympathy to the US dollar. Not sympathy, but coming out of it as a anti-dollar play, and weakness in the commodity currencies, in the oil Aussie. In the oil, Canada, and commodity prices in general for the Aussie. So that's where we are at the moment. Let's have a quick look, see if any trade ideas have come in. I'm going to keep this down to half an hour on the pre-opening. Any trade ideas in the room over Asian session? Haven't looked. Just something in for Mad Max, so nothing really coming in more recently. Mad Max, short Aussie yen. Yeah, good trade. Let it run with a stop loss. .907 a lot, which means it looks as though you're position sizing nicely. Yeah, like that one. Like the direction of that. I mean, yen is the weakest currency across the board if you look at the daily time frame, but it's they're both weaker currencies in terms of the bigger basket over the longer term. But certainly the Aussie is the weakest currency in the shorter time frames at the moment, and you can see that's in the in this this move to the downside on this 1 hour chart. So you've got 1, 2, you've got 3 days or so here. So yeah, like that one. What's buzzing me? Let's have a look. Right, that's clever, isn't it? Everything's gone off my screens. Oh no, what's going on? Okay, that was bring stability. Yeah, I was stunned. Mad Max literally hit his exit mark in 30 minutes of posting that idea. Yeah, I mean, it's only a 25 pip move on it, but yeah, great trade. Aussie just 3 hours ago, I mean, this was basically bang in line, just to comment on you there. I mean, that was bang in line with the RBA announcement, and that's when the Aussie took a tumble, basically. As they were talking there, so basically, yeah. See how you look in the journal tab, yeah. It's just pinged on my iPhone. Damien, short Aussie New Zealand. That's my trade as well. We short Aussie New Zealand, so I'm short that one as well. In the trade idea, down momentum. Good stuff. And yo-yo from Pound New Zealand. Short Pound New Zealand. 6 hours ago. Okay, so I'm going to leave it there. We've got the non-farm payroll out at 1:30 GMT, which is basically the next stream for Tony. He'll be coming on for that. He comes on about 1:15, which is 8:15 in the morning in Eastern Standard Time. He'll be streaming the non-farm payroll. It's worth tuning in for that. He normally takes some pips out of the market. We'll see what's happening there. For me, for the bias, any looking for any strong number, I think is going to be less volatile than a weak number. A weak number could see this come under big pressure. So the market is definitely looking for that. Any strong number, really strong number, anything that puts the dollar index up 175 to 100 points, not getting too excited about it, because so I'd be more inclined to sell into that at the moment with the other concerns in the US dollar, and the fact that the two hikes are pretty much in the market in terms of the bond yield pricing. So any big moves in the dollar at the moment on big numbers, I'll be looking to sell into. We'll see what Tony comes up with later, of course. But any weak number, I think you could see the dollar index, back down here. Look where dollar index was, just before the Trump election, back around the 95 level. That's 300 points away from here at the moment. I'm not saying we're going to get down there, because obviously we've still got, an interest rate hike cycle environment. And you look against, pairs such as the Aussie that are not moving, Japan keeping their interest rates below zero. It's still going to have its interest rate play there, and that's still going to, find support for the dollar index. But I think negative numbers, bad numbers, 120 area could be more negative than positive. Right, I'm going to leave it there. After the non-farm payroll, if you're around, Jason and I are going to do a double act. We'll be coming on about 15 minutes after non-farm payroll, just for a weekly review and a weekly preview. And then, of course, I come on for the global, for the London market wrap at the end of the day at 6 p.m. London time. Okay, in the meantime, trade safe. It's a chaotic market out there. Sometimes it's you get markets like this. It's a great trendy market for certain pairs. Of course, all trends come to an end at some point. For the moment, I'm still looking to continuation of those trends to the upside. Speak to you soon. Good luck.